What's up, everybody? I hope all of you are having a great day. Today's topic is investing, and most importantly, my way of doing it. So, what comes to mind when you think about investing? Is it saving up your money? Is it the real estate market? Is it the stock market? Is it cryptocurrency? Whatever it may be, that's great. But the thing we're gonna focus on in this video is mostly the stock market. But this method of investing, it works for any market. You can use it to save, budget, whatever you need, this works. Now, this method of investment is so simple that even an ape can figure it out. Then again, it being simple does not mean you will have a lack of results, ladies and gentlemen. In fact, this method of investing is so perfect that if done right and for a long time, you are pretty much guaranteed to beat the average investor. So, you're probably asking, what is this method of investing? So this method of investing is called dollar cost averaging, or DCA for short. So what is DCA? DCA is basically investing a certain amount of money every certain amount of time. For example, buying $50 of Tesla stock every week, but it doesn't have to be weekly. It could be every month or every day. But the main point is the repetition. You can't break the cycle. You just need to invest even if the market's low, even if it's high, you just buy. An investor can employ the straightforward strategy of DCA to accumulate savings and wealth over time. Additionally, it gives investors a way to overlook current market volatility. A good example of this is in retirement plans or 401ks. You buy every week, buy when it's low, buy when it's high, and just keep buying. It's that simple. Now, all of that aside, this only applies as long as you're buying a stable asset such as a broadly diversified ETF. Do not go and use DCA to invest in volatile assets like a pharmaceutical company. That will end up with you losing your money and crying. We don't want that. What I like to do is invest in ETFs with $100 a week, every week. Can't miss a week. And then over time, over the span of a couple of years, well, not a couple of years, usually it's sooner than that, but this is just a long-term process. I make a lot of money. Because this is a long-term investment strategy that could sometimes take years to fruition, so when done in the short term, it's basically useless. I personally have been doing DCA for more than a year now, and I've seen significant gains relative to my investment. Now, past performance isn't an indicator for future performance, so please invest at your own risk. Thanks for watching, and have a great day, folks.